What's good, beautiful people? What's good? What's good? It's your boy Marcelino. We back, man. Today we're gonna be back testing my strategy on EuroJPY. So I need to collect a bit more data for my strategy. I'm always speaking about collecting data or data. It doesn't matter how you pronounce it, but I'm just back to collect some data for my strategy to know how it performs on EuroJPY. Okay, so I do enter on the 1 minute, and therefore I'm only going as far back as about May the 21st. I really just want to capture the month of June as we come into the end of June. So that's what I want to do. I want to be capturing the month of June. Okay, so that's what we are going to be doing. We are going to be looking at this specific pair. So without further ado, what I'm going to do is hopefully I can take about 5 to 10 trades within this hour of backtesting. Yeah, let's go in. So this is my personal strategy. I'm not going to be discussing how or explaining how to do it. If you guys catch on the way I trade, then you guys can go ahead. So I'm not going to be looking at the 21st because I did see exactly what happens. So I do only trade 2 4-hour candles, so I will only be taking note of 2 4-hour candles. So let me go to the 22nd or the 23rd. Okay, so that means it was a weekend. Okay, perfect. So what you can see here now is looking at EuroJPY, just looking at structure. So we were clearly moving higher, making higher highs, higher lows. Okay, this is the last low right here, or you can call this the last low, because we have 2 consecutive bearish candles. We had a slight break of structure. We then formed, even if that was not a break of structure, we then formed a potential higher low. We failed to make a new higher high. So what I will note is that this is now kind of, in some sense, it's a potential lower high before this was formed. So now a lower low is formed, taking out this structure right here. Let me do this. So we took out this structure, so you can see structure was broken. What can you now anticipate? I will only be anticipating price to go lower. So now I'm looking at the 3 o'clock candle, 3 o'clock in the morning candle, and I'm seeing that it is bearish. Okay, that's really good. We broke below these levels, slight break below with the body, doesn't really matter. So I can anticipate price to continue down. Okay, now in the first 4H candle. So what I'm simply going to be doing is anticipating either a pullback until the 50% level, or just having a continuation down. Let's see if we can find a trade. Let's go to the 15-minute. So now looking at the 15-minute, you can see that we were struggling to break below this for quite some time. We then broke below it right here with this 15-minute candle to win that right there. So this is an area in the market where something can happen. Let's just see, and we're gonna follow price to see what exactly does happen. Okay, that's looking good. That's looking really decent. So you can see price action came into this kind of area. Let's get another candle before we can consider anything to do. Okay, let's see. This is looking not too bad. So what I will do in this instance, I will say we attempted to break out of this right here, but we failed to break out of it. So I am anticipating price to now continue down. That's what I'm looking at. So let me explain this to you guys in a better manner. I don't want to be too vague explaining things. So you see this area right here, we had a pullback, we failed to make a new low, right? But if you're looking at lows being made below the bodies, then we did make a low. If you're looking at lows being made below the wick, we failed to make a new low. Okay, so it depends on how you look at it. To me, this is we failing to make a new low. We then attempted to go higher to break structure. We failed to break structure, showing more signs of bears within the bear market. So this right here shows us that there is more bears than there is bulls, because we broke below this area right here. So I will be looking for sells now on the next 15-minute candle. I will just be marking the low of this 15-minute candle and the close of the 15-minute candle. So the importance that you do need to note here is these wicks right here. So you do want to be at break even as soon as possible, just based on how price moves. Price can really come in here and then we can continue higher, so we can fail to break below. So let's see. I'm gonna need a bit of a pullback to create a wick on the 1 minute and then we can sell off. Okay, there we go. That's a bit tough, eh? That's very tough. So this is the low of the candle, that's the close of the 15-minute candle. Let's see how this plays out. Okay, we are creating an area in the market where price is failing to break above, an area in the market where price is failing to break below too. There is potential for us to go lower. Do I like this trade? I don't like it that much, so I'm not going to enter it. Let me see exactly how this plays out. 23, 24. Okay, there's that momentum that you're looking for, that continuation. So what I will do now is I'll go straight to the 15-minute again to see how it played out. So now, because I didn't like the way the 1M was forming, let me just delete this. There's too much lines on the chart right here. So this doesn't have too much momentum in it. I am only looking for sales, guys. I won't be buying anything, even though we have a triple bottom here and possibilities of price going up. That's not my strategy. I'm only looking for sales. So I need a momentum candle in the direction of a sell to then go down back to the 1 minute. Okay. Yeah, so now you can see that this area, this rejection area here, is starting to play a big role. We then get a bullish engulfing candle, so there's a high possibility that price could go up. 845, let me see. Okay, that's my first, so that's my first session done. So let's go back to the 4H. So now what you can see is the 4H pushed higher. Okay, so we have a strong momentum candle to the upside. So that 4H wouldn't have been finished on the 15 minutes. So what you simply want to do is do this, and then there we go. So now you know. So now I have one more session left in the day, and that's the next. Do I want to look for buys? Let me see. If this is structure right here, then yes, I do want to look for buys based on a double bottom. You can see we're failing to break above or failing to break below. We have a massive bullish candle engulfing all of these. I do think if we do get a pullback, there is a chance that I could get into this buy. Okay, because you can see price action right here is failing to break. This right here could be structure, as I mentioned, and structure could have been broke. However, I'm just gonna be, for now, let's see how this plays out. So what I'm gonna do is I'm gonna mark this right here. Let me do this. Okay, so let me put this line right there and then lift this up to 99. We can delete that right there. See how this plays out. Okay, go down to the 15 minute. Now you're looking at structure on the 15 minute and you're saying, okay, you can see we took out this area right here, which was supposed to be a potential lower high to then form a lower low. We failed to make a new lower low, taking that out, breaking structure 2, breaking these. So we broke multiple structure regions. I do expect a pullback on the 15 minute before continuation. Okay, that's just the way price action works. If we get to this area, that will be very good. Even if we get to around, okay, let's just see how far we do get a pullback. We are looking for a pullback. You don't wanna, okay, this would be a continuation trade. Just, I'm liking this momentum in the 15 minute. So what I'm gonna do is I'm gonna mark the high. I'm gonna go down to the 1 minute, hoping that I get a pullback. If I get a pullback, I will then be trading this in the upward direction, guys. Okay, that's a decent enough pullback. Okay, wonderful. So what I'm doing now is I'm taking my first trade on EURJPY. I will be placing this at 970, 132, 970. What is this? A 6 pip stop. going for a 12 pip TP based on the fact that it's kind of a continuation and we moved up quite a bit already. So I'm only going for 1 to 2. Righto, let's see how this plays out. Okay, we are quite close. Okay, deleting that order. Let's see if we can actually, so this pullback is quite strong. It's going to be a big stop loss, so I'm not going to be looking to enter that trade anymore. Even though something like that happened, I won't be looking to enter that trade. Let me see how the next candle look. That's not the best in terms of, if you're looking at momentum, there is momentum in here to the upside because you can look at the wick relative to the body, but I don't like it really. So let's see. Okay, what's the time here? 12:30. Oof, this move, I'm looking at this move and I'm saying we might be overextended, but let me see if we can find this and take this trade, guys. Let me see if we can take this trade, if I can get a pullback on this. So you can see here's a level in the market where price failed to break above for quite some time. Price could just continue. So we had this bit of a consolidation on the 1 minute. We are breaking out of that consolidation now. Let me see. Okay, boom. I think I'm going to take this trade. Let me see. If I have a 6 pip stop loss, then I might be able to take it. Okay, perfect. There we go. We're taking this trade. 6 pip for 12 pips. Let's go. Okay, that's stop loss, guys. So something that you need to know about me is that I'm always closing my physical TP easier, but the minute I see price going against me, I'm moving my TP to half. So this is my stop loss right there. So that right there is stop loss. To be fair, I should never have taken this trade on the up move. I should have waited for this pullback and then wait for price to go higher. Okay, so half a stop loss. Let me record this, guys. So I'm gonna add this to my journal. Let's do this. Okay, so we're adding this to our journal right now. And to those of you on Instagram who keep on asking me what is this on my history hold tool, it's simply just a fib that explains to me where my RR is. So this is half of my stop loss. This is 1R and that's where I go to break even, and then this is 2R. So that's all it really is. It's nothing major, guys. There's nothing like super scientific about this. You guys need to understand that everybody can do this. It just takes a matter of hard work, and that's why you always see me backtesting, collecting data. And once you have your data, you need to forward test to within every trade that you take within the live market is a forward test trade. Basically, you test in your strategy. So this is the 24th of May. Let me do this. 24th of May. What time is this? This is 12:45. So yeah, guys, it's all about collecting data in this niche, or in this niche of work. Just because forex trading is all about knowing what your chances are of winning and what your chances are of losing is, so that you know more or less how to or what to risk. And once you know what to risk, you can then start to see over a long period of time profits. Even though you might lose more than you win, or you might win more than you lose. It doesn't really matter. But what the important thing is that you make profit and you make money. Okay, and the only way you make money is knowing what your strategy does, knowing the numbers, and so on. Okay, let's go to the next trade. Let's see. So this was a bit of a A bummer. Okay, doesn't matter. So we have 1L of 0.5%. That happens. Let me see. So on this day, it's about 1 o'clock. I'll call it a day. And I knew, looking at this move is quite overextended. That's the problem. Like, you don't want to be trading price action where it's very overextended. We are due a pullback. It doesn't matter on what time frame. If price action looks like this, you're definitely due for a pullback. Okay, so let's go. Let's move. That's 1900, 2300, and then 03. So guys, looking at this candlestick right here, there's no momentum in that candlestick, no volume in this candlestick. Okay, so since there's no volume in this candlestick, what I'll be doing is I'll just be mising that specific session on this pair. I'll just be mising it. I won't even be looking at it. I won't think about it. I won't mark this pair as tradable for that session. So that's the way I trade. Okay, now do you see? Now that's volume, that's clear momentum, that's something that you can look at and you can say, okay, let me take a look at that. You know what I mean? So that's the way I trade. I trade based on what I see, not based on what I think. So I can see that there's momentum in this market. I can see that there is something that I can do in the next 4 hours, possibly, based on what I'm seeing in front of me. Based on this 4H, I can anticipate something to happen within the next 4H. Okay, so that's all that we're doing really. So now let's go down to the 15-minute. Let's see exactly what is going on here. So you can see we had this push up, we had a bit of a pullback, and now we have price pushing higher. Okay, this is the high of the 4H. Something to note. Let's see how the first couple of candles play out. Little to no. So you can see we're pushing higher, but we're not pushing higher with the same momentum or the same volume in the market. We need that volume in the market, guys. We need that momentum in the market. Okay, and there we go. That's something that you are looking for. So this would just be simply a continuation. We didn't have a pullback yet. I really like those pullback trades because that's where you can start capitalizing on bigger risk to rewards, guys. When price action comes back to these levels in the market, straight off from the first, like, this is the 4H close, right? If price action came back here, you can then start to anticipate the price is going to make a new high above this. And when you're going on to the 1 minute, that's when you can really start capitalizing on big moves, guys. So yeah, we have 1L for the day. That's minus 0.5 so far. So let's see how this plays out. Okay, we're not getting a pullback. Let's see if we're gonna get a pullback. Come on, no pullback. Cheapest, no pullback, guys. There's no pullback. That is a problem. So let's go back to the 15-minute. You see the next 15-minute just left us with no real pullback. It's a problem. What will I do with this wick? Okay, I don't trust that wick, so let's see. This is 12:30. That is 12:45. Maybe. Okay, I have like 1 or 2 15-minute candles left. Okay, no, the session is practically done. Yep, session's done. Let's go on to the next day. And that's why with this strategy I back tested multiple pairs, because I know that one specific pair might not give me a trade on a day. You know what I mean? And that's why, if you know you can trade, if I trade the 1 minute only, I can trade one pair completely on its own and I can get multiple trades in a day. But then you just need to know what you trade and how you trade it and so on. Okay, that's the important thing, guys. Knowing exactly what you are doing with your specific strategy and only applying that strategy. This is looking good. Why is this looking good? Because looking at, so we did this, right? We formed this high, we did that, we formed a lower high, formed a lower low, and then we shot up, but that was within kind of within true structure. So this is a higher low, higher high, higher low, double bottom, and then we went up to form a new higher high. Price action came back to kind of retest this. This is where price action switched back to bullish. Okay, so what's the key things to note now? Now you can see, or from price or from structure, key level, whatever you want to call it, you have a bullish momentum candle. What can you now anticipate after this bullish momentum candle or bullish engulfing candle, or from key levels? I'm hoping that we are going to get a pullback. If we can get a pullback, that will be brilliant. I will really just, it will be so nice if we can get a pullback. Let's hope that the next couple of 15-minute candles gives us that pullback. So you can see even on the 15-minute, here we switched bearish, we made a lower high, lower low, lower high, pushed. Okay, that's not necessarily a lower low or lower high, sorry. We failed to make a new low there. This is a lower high, lower low. We then broke structure, so you can see anywhere in here a retest or price coming back to fill this inefficiency right here. So you can see there's a ton of inefficiency in and around this region. So let's see what price does. Boom, immediately with that momentum. So this is definitely a continuation. Let's hope we can get in. That's the wrong thing. Let's hope we can get in, guys. If we can get in, I think this will be a decent trade. I think this will be a really decent trade, considering we could go for a higher high on the 4H. Okay, let's see how this plays out. Come on, give me a pullback. Okay, to me, that's enough to be placed in a trade. That is enough to be placed in a trade in and around 410. So 133, 410. I'm going to be placing my stop at 3 pips below this low. Now you can go aggressively and place it below here at 1.5, but that seems a bit too aggressive for me. And price can just pull back real quick and then take me out at half a stop loss. Okay, I think for this I can anticipate like 1 to 3 based on 15-minute 4H and so on. I think the 4H should push up at least into like those 15-minute candle highs. So let's see, do we get triggered in? Don't we get triggered in? Let's see. So now you can see we're playing around a bit. I need that momentum. Okay, there we triggered in now. So what you want to do is you just want to move this. You know that we're at 410. Screenshot this as the before. Copy. Let me see exactly how this plays out. Let me just paste this. So I'm pasting that. You know that our stop loss is mentally now at half. Okay, I want to see price move with momentum to the downside. That's stop loss, guys. That is stop loss. That's 2L. So we're at minus 1%. Yep, quite a bad start. Quite a bad start to this trading session. Let's see how it plays out, man. Let's see how the rest of these trades play out. I did screenshot it, am I correct? Okay, yes I did. What date is this? This is the 26th. That's 7:20. Okay. So what I'm doing now is I'm simply just saving it in my journal. 7:20 a.m. The reason why, I think I said this already, the reason why you need a journal explaining you need to, in your journal, you need to have as much detail as possible, guys. And the reason for that is you need to state whether you are going long, whether you are going short. You need to state whether it's a continuation or reversal. You need to state whether you are, what times you are trading. If you trade in London, you need to state that you are trading in London, what specific time, so that when you look back on that data, what you will then see is that patterns arise in your trading where you lose in more often than not in the same areas or the same times or on the same pairs. And if you're losing on certain pairs more than what you're losing on the other pairs, just cut them out, guys. It's that simple. Just cut them out, and then you move on to the pairs that you're winning on, and that's the way you will then be able to win more than you lose and make money, because that's what you are in trading for. You're not in trading to do anything other than make money. Okay, what's this time here? So it's still quite early into our session, so I can possibly continue looking for trades. Remember, we're only looking for longs at this point, so I'm waiting for 15 minutes to switch bullish with momentum. So now I can see right here we filled, this is 8 o'clock, we filled all of this inefficiency, which is really good. So now I'm waiting for bullish momentum. That's not really momentum. Let's see what the next couple of candles do. There's some momentum. So now you can see, or from this inefficiency, what is inefficiency? Inefficiency is simply when there's just buyers in the market. So you can see here, look at this, before this candle was created, we had a candle that created a wick, and that wick went up all the way until there, right? Then we had just buyers in the market pushing price up above this level, right? Then this wick basically came back, the wick after that came back to fill up most of this buy. So there's more or less balance in the market, right? So that means that price is efficient or price is balanced. So imbalance or inefficient price action is when, so I don't really trade smart money, I just hold it in mind. When price do come here, then I can say, okay, inefficiency is kind of filled up. So you see, you had this wick here, you then had a ton of buyers pushing the market up, and you didn't fill this whole space in between here. So what happened here was price just came down, filled this inefficiency or imbalance in the market, and now we can then go up. Okay, so now I'm expecting price to continue higher, and we are only looking for buys. So let's see how this plays out, guys. Let's see how it plays out. We're going down to the 1 minute, expecting buys. We're still within our trading area. Trading view is bugging again. I'm hoping to catch at least 5 trades on this trading session to see how I play out. I was hoping for like 10 trades, but yeah, it's getting quite late, so it's already like 5:30 in the evening, and I do want to eat before about 6:30, because that means my fasting is going to be a little bit later tomorrow. Okay, let's see if we can get a pullback here. Hopefully enter at one of these levels. Give me a pullback. Okay, that's looking good. Okay, so what I'm doing now is I'm actually looking at this and I'm saying there's big potential for us to go higher. So what I'm going to do is 70 region right there. I'm placing a buy stop, and I'm placing my stop loss at 3.5 pips, right? So this will be there at 73.5 pips. Maybe I must go for 4 pips so that we can be below this wick. Okay, 4 pips is gonna be cleaner. What we can now do is we can now aim for a slightly bigger TP of, let's see, maybe 1 to 5. I think we can aim for 1 to 5. Now a lot of people gonna ask me, what is this based off from? It's based off from where price has bounced off from and where price can continue to and I don't really want to show too much of my strategy. I will, as I'm revealing the bare bones of my strategy really. So yeah, let's see. We're not tagged in as of yet, so we're not tagged in. Oh, wonderful. So we're not tagged in. That's beautiful. The fact that we didn't get tagged in. That's really, really nice. So now I'll delete this because my stop loss is now going to be a bit bigger. Let me see and review this trade to see if it's still tradable. So you can see we're at a pullback. We failed to break above. Pullback, higher high, potential higher low, no higher high. We then take this out. Okay, I will not be taking this buys anymore. What I will then do now is wait for the next 15 minutes if there's still time, and boom bam bish. Would you look at that, mate? Bloody hell. Okay, so now what you can see is that we pushed higher. Now we're failing to go any higher, and we just took out this. So I'll just look at the next session then. In this case, I'm not looking to be buying off the price. Just did that. The way prices are closed here, I'm not looking to trade this. I'm not looking to sell this. So I'm just gonna leave it and go to the next day. And it's all about, guys, it's all about realizing what your strategy is about, finding out where, on which pace it works, how it works best. And when you have that, so looking at this 3 o'clock, but when you have that, you really, like, you have optimized your strategy. When you have all of that information and you look at it and you can say, I'm only trading these pairs on these days, I'm only trading on these days because this is when I win the most, I lose when I take longs, so I'm only going to be taking shorts. What you're doing is you're removing a big amount of mishaps or things, trial and errors that can happen in your trading. Because if you're losing on longs 50% of the time, what's the point of trading longs? You know what I mean? So just trade shorts, meaning that 50% of what you would have taken on that longs, you're not taking anymore. You're not taking those longs anymore at all. So now you are more prone to win more, even though you're taking less trades. So yeah, that's the way you just filter out dot, and you look at pairs, you look at everything. So looking at this specific candle, there's no momentum in that candle, so I can't trade the next candle. Let's see how the following candle plays out. No momentum either. So you can see at one point we were all the way up there, bulls pushed us all the way up there, bears then pushed us down. This could kind of be considered as a momentum candle just because of like kind of this pin bar type candle. And you can see this would be our, we are moving quite slow, but this would be our target area. So I think, now I don't necessarily trade this all the time, but let me see how it plays out. Let me see how it plays out, guys. So 112 right there. Let me see if I can get a pullback on this. Okay, I don't see structure on the 15M being very just yet, so I won't take any, I won't be taking any sells. Nope, I can discount this day and just say on this specific pair I'm not trading. Boom bam bish, let's move on to the next day. So there you can see, what can you see now? Price is moving higher, ton of momentum in price action right there. I think price does look like it's a bit overextended. Let's see if we get a pullback on this. There's no momentum in this. Let's see if momentum steps in. Okay, there we go. I can anticipate price to go higher. I can definitely anticipate price to go higher. So let me do this. Drop down here with the rest of the candles. There we go. Let's see if we can get a bit of a pullback. If we get a bit of a pullback, we should then be good. Okay, boom, boom. Okay, I like these rejections in and around this region. I like it a lot, man. I like it a lot. Now give me a momentum candle to the upside. Oh, okay. This is really beautiful. This right here is really beautiful. This is so beautiful. I'm anticipating that the next candle is more likely gonna start going higher. So what I'm gonna do is I'm going to place this. Even if I can't get in on this candle, I'm gonna be seeing if I can get in on the next candle. What I don't like though, sorry, is that we are not bullish as of yet. That's what I don't like. We didn't break structure on the 1 minute. That's the problem. So what do we do? We wait for the next 15 minutes? I think the safer vote would be to wait for the next 15 minutes. Safer vote would definitely be to wait for the next 15 minutes. The more aggressive entry would be after you get this pullback, entering in and about right there, having your stop at about 2 pips, and then what you can do is you can aim for this right here. So this is the aggressive entry, guys, and you can actually take it way higher too. You can take it for 1 to 5, 1 to 10. This is the aggressive entry. I think I'm going to be looking for this entry right here for 1 to 10. I think I will be taking this. So let's see how this plays out. Okay, boom, we are in. That's stop loss. That is definitely stop loss. Let me see. Yep, that's stop loss, guys. Bit of a problem, but okay, no problem. Let me just screenshot this. I'm going to be looking at the next 15-minute candle, as I mentioned to you guys. What time is this? This is 12 o'clock. I'm going to be looking at the next 15-minute candle to see if I can get the entry. Because this was the aggressive entry. The conservative entry would be on the next 15-minute candle. And the reason why I don't mind losing like that is because, as you can see, a lot of my trades have a big TP, right? 1 to 5, 1 to 10, and so on. So what you can then do is you can take these 0.5%, and then when you get those big wins, it's really big. So yeah, what is this? This is 12:17 on 28th of May. 28th of May, 12:17. Let's see, long. This was 2 pips for 20 pips. And -1. 100%. Have that. Okay, let me see how the next 15-minute candle closes. If it closed strong bullish, I will then be looking for, okay, we didn't close exactly strong bullish the way I expected it. Let's see how the next couple of candles closes. Okay, that's a bit of a problem. Do we take this? This is a, what do you call this? Some star, evening star, morning star, something like that. But I do think we closed above this, meaning there's bulls in the market now. Higher highs on this candle. Okay, let me see. I'll see if I can get an entry on this. If not, then we're not forcing anything. So this would be my stop loss right now. Okay, there we go. There we go. That's what we need. This is what we need. Okay, what do I see here? I see a double bottom potential for, if we can get a bullish engulfing this candle and be in nice momentum. Boom. Okay, this is looking really good. Okay, that's not too bad. That's not too good. And this is the way trading goes, guys. You have a setup. If it goes against you, or like if it looks like this, and you say, "Bloody hell, mate!" Like, bro, I wish this thing just followed the plan. But it's clearly not following the plan. So let's call it a day there with that session. Remove drawings. You can see overextended market price pushing down. More likely that the next candle will probably be yellow too. Okay, what time is this? So it's 3 o'clock. There's hardly any momentum in here, but based off from what I'm seeing right here, you can see there's strong key level at the top right there, holding price failing to break above, anticipating price to probably go lower. I don't like the fact that there's no momentum in this, so I'm going to play the next 4-hour candle. Little to no momentum in that one too. That's a problem. And I know that this next candle probably is going to have momentum. Okay, no momentum either. I don't trade that time. Don't trade this time. Let me see, what is this? 2300 03. Looks like we kind of stuck in a range. Do we break out? Yes, we do. That's perfect. What time is this? 7 o'clock. I'm anticipating that the next price will probably go higher. That's all that matters to me as a day trader. What's happening on the smaller time frames? Let me see now. Boom. Okay, let me see. Give me a decent movement on the 1M. Just a bit of a pullback. Okay, there we go. Now start giving me bullish. Okay, that's good enough for me. Let me take this off real quick. Let me do this. What I'm going to do is 85, 4.5 pip stop. Let me remove this real quick. Move this upper line. And then 1 to 2 right there. So I'm going for 1 to 2 because of the continuation already moving. Okay, that's not in yet. And boom, there we go. Now we are in. What is that? 85. That's where we got triggered in. Let me copy this. This is, what time is this? 11 something. Okay, let's play this out. Let's play it out, guys. Let's play it out. Bloody hell, mate. Cheapers. That's another stop loss. That's 4 of 4 losses. That's crazy. I don't even have to put a fib on here to see that it's a loss. I can see it's more or less half. Yep, it's more or less half. So what do we do now? What you do now is you journal this. The time, clearly Euro JPY is looking like it's not the pair for this specific strategy, but obviously it's the first week of June. The last week and the first week, usually with my strategy, or maybe it's just me, it doesn't perform the best. That's why I told you guys for this week of the 28th of June till the 2nd of July, I will only be trading once a day based on this information that you guys can see here on this video right here. So yeah, let me just record this. It's the 1st of June, 11:22. So the 1st of June, that would be 11:22 a.m. What is this? 134.085, and then you have this continuation, 4 pips. Guys, and also what you guys need to take into account when you are backtesting, the results that you get in, it's not the results against you, it's the results of what you are seeing for that specific strategy. And I say what you are seeing because somebody else could be trading this specific strategy on this specific pair completely different, because we all have our own perspectives of things, or we perceive things completely different. Each person perceive things completely different, and that's something that you need to take into account, guys. Just kind of remember, you know what I mean? So yeah, it's nothing got to do with how you trade. A lot of people are so I think it took me quite a while to actually get used to backtesting. Even now, like my results on backtesting compared to live, it's completely bizarre, but I still do the backtesting so that I can see the ones that I perform well in on backtesting. I'm probably going to do much better in the live market, and I don't know why it is. That's why a lot of people will ask me like, Marcelino, where do you think I should do my backtesting, or should I actually do backtesting? For a lot of people, if you do backtesting and you see the results is skewed in the wrong direction completely, when you according like when you, or how do I say, so if it's skewed in the wrong direction when you're backtesting, but then when you do live trading, you get in way better results, I would then say jump on a demo account, or even just be on TradingView and trade live, screenshot in your entry, screenshot in your stop loss, and then journal those things that you are, the parameters that you are taking in the live market, because a lot of people actually do better in the live market. And then that's the way you will formulate your trades, or your rule-based system based on what you are going through in the live market. Okay, so let me see, I still have some time in this trading session. There's no momentum in that candle, so because we are only looking for buys, I can't take a sell. Let me see, do we get a pullback into this area before actually? So that's 130. Bloody hell, mate, bloody hell. We are moving up now. Now this is against my rules to be taking a trade at 130 or above. I think the latest time that I trade is about 130. This is 145, but I do think price is going to move higher. So you can see price just came to come retest that. What I will start to do based on break and retest theory, you can see that this is a break and retest, momentum starting to move to the upside. Jeez. So this is something you can anticipate, but that's not our strategy. Our strategy should be to enter there, you stop loss below here, so 6 pip stop loss, and then you go for like a 12 pip or a 12 pip TP. So but that right there, break and retest, textbook break and retest. When you do get here, you would have been break even. So I'm not going to be taking these trades out of my times, out of everything, and then I'm going to have to journal it, and it's going to be throwing me off with numbers. So yeah, man, let's see if we can get a win in this last trade, guys. Let's see if we can actually get a win. Bloody hell, mate, like let's just get a win. Give us a win, dog. Give us a bloody win, man. So that's 3 o'clock. That's not looking like there's any momentum. On the 4H, we're looking like we are in a bit of a range. This is what you can see. We are ranging, guys. Okay, so you're looking for a breakout out of this range, and then from there we can then start to look for a trade. What's this time right here? That's 11 o'clock. I didn't even see that this was 7 o'clock, mate. I could have taken this sell down, but okay, it's gone. It's gone now. We're still ranging. That's 1500, that's 1900, that's 2300. Let's see how. Okay, there's no momentum in that candle at all. Nothing in there. Just give me a breakout. 1900, 2300. Give me a breakout. Boom. Okay, that's good enough for me to look for a trade. Could be. Just go to the 1H quickly. Okay. Anywhere in and around this region we could be targeting. So go to the 15-minute. Okay, perfect. Let's see how price. You don't want price action to trade above here. This is a pullback on the 15-minute. If price action trades above here, we are then in buy zones on the 15-minute. So you just want price action to start trading below that. This is looking good. You can see there's an area in the market where price is failing to break below. This is an area where we failed to break below for quite some time, or failed to break above here, sorry. So this is an area in the market where we failed to break above for quite some time. Area in the market where we failed to break below for quite some time. We then broke below. You can now anticipate price to now move lower, guys. So all I'm doing now is I'm anticipating price to go lower. Hopefully I can find an entry on this. Let me see how price is looking right here. Take this off because this was just showing you guys where price was failing to break above and failing to break below for some time. Let me see. Okay, that's a hell of a wick. That is a massive wick. What I will do now is I'll place a, let me take this off. Gonna place a sell stop right there, 2 pips, and then I'm taking this down all the way to this right here for about a 1 to 6. That's what I'm doing. That's what we're looking at, guys. Let's see. Still not triggered. Still not triggered. Still not triggered. Okay, now it kind of seems like we're ranging. I don't know, probably at this point I'm thinking about deleting this. Let me see. So I'm leaving that right there. We're not triggered as of yet. There we triggered. Okay, perfect. Okay, I think that's break even. So what you want to see is how price reacts at about the 1 to 5. If price starts to show like, if price starts to show signs of, how do I put this? Like if price starts to show signs of weakness here, you then want to close it. So here you want to watch out because this is an area of traffic. Yeah, but if price just blows through this, we can just let it go. Bear in mind that we're not trading with a physical TP. You with this, you're just trading with a stop loss. You don't have a physical TP. You have the TP on trading view. Boom. Okay, we blew through that. That's good. So let's see. I really don't like the way price action is acting right here, but let's see how it plays out. I think at this point the way price action is playing, unless we get a strong candle through this, if we start getting wicks at this region, I'm going to close the trade. So let's see right like this here. So I will actually have a physical TP right now. I'll put a physical TP at 1 to 5, guys. Boom, 1 to 5, and that's 5 trades completed. That is 5 trades completed, guys. Let me screenshot this right here. And the realness in this, let me see, what time is this? 7:24. Like, guys, the realness in this is that showing you can lose 4 trades in a row. I didn't even get break evens, guys. I caught 4 losses in a row, which means that's like minus 2%, and then I caught a 5%. So for this trading session of 5 trades, let me explain to you guys. So let's do this. So this is going to be a trade recap. We had 5 trades, so trade number 1 minus 0.5%. 0.5%. Trade number 2 is minus 0.5%. Trade number 3 minus 0.5%. Trade number 4 minus 0.5%. And then trade number 5 was 5%. And what that gives you is a total %, let me say, plus 3% for the session. I think this right here, let me change this to black, and then let me also, how do you do that? I think visibility, nope, border, there we go. So here we go, guys. What this shows you is that when you minimize your stop loss and you let your profits run. Now, I did tell you guys I'm going to be aiming for a trading session with anywhere in between 5 to 10 trades. The reason why I'm not going for 10 trades is because of, obviously, the length of this video is going to be quite long, but I need you guys to understand that this only happens because of you understanding what your strategy can do when you're doing this in the live markets for a certain pair. If my strategy performed better on EJ, then that means I could have risked a bit more, like 2%, and then only close out 1% each time, knowing that when I get my big win, it's going to cover all of the losses. But if you're risking, let's say on a what do you call this, on a challenge type thing, on funding talent or trade or FDM or whatever firm you go into, if you're risking 3% or 2% and you lose your first 4 trades, which is highly possible, when your wins do come, like, who knows what the next 5 is going to be. The next 5 could be wins, and then I end up with a 10% on the session. But the point of this is that you don't know when or how your sequence of wins and losses is going to come in the market. So what you need to do is you really just need to take into account that you don't know that, and the faster you can do or take into account that fact, the better your risk management is going to be, the better your trade management is going to be, and the more likely it's going to be that you're going to be successful in this market. Because being successful in this market is all about being able to let the numbers play out, guys. So yeah, have a wonderful evening further. Hopefully I can see you guys for another backtesting session tomorrow. If I do the backtesting session, that means I'll be uploading 3 times tomorrow, because tomorrow is Traders Talk. It's the daily video vlog, and then if I do the backtesting session, it will be the backtesting session too. So yeah, guys, have a wonderful evening further. Have a great week too. I'll check in with you guys tomorrow. Peace out.